Everyone, in this video I want to talk about how to build an account, how to focus on consistency. Whether you have a small account or a large account, this method works out very well. It helps remove a lot of noise from your trading. You can focus on a select few things, and in my opinion it removes a lot of emotions which a lot of people have, and in result they lack proper success in trading. So this is going to be based on using supply and demand, trading, SPY, and QQ only. It's the market themselves, and it gives us less noise. So we're going to get into a bunch of different charts. I'm going to show you a bunch of different examples, some profit potentials, some setups that we took in the Discord. This video will be packed. I definitely recommend if you want to grow an account or focus on consistency, this is a very good video. Before we do begin, all I ask is check out my Instagram. I will link it in the description below. I post daily trading recaps on here, along with very good trading tips and tricks. The link to this will be in the description below. It's a very good resource that you're missing out if you aren't following it. But now let's get right into the video. The reason why I want to focus on trading these names only is because they are the markets themselves. I chart the S&P 500 future, and whenever I'm ready to trade, I solely trade the SPY options. And whenever I'm ready to trade the NASDAQ or /NQ, its future, I chart NQ and trade QQQ options. The charts are identical. They are just different instruments. Now doing this will give me a laser focus on these names. I get to learn their personalities, and I spend less time looking for the next best setup. Now, I know how these names trade. I've been trading them for many years. So I know when I'm looking for volatility. I know when the market's balanced. I know when it's imbalanced. And I know when to sit sidelined. And this lets me spend less time looking for the next best setup because I know these names will either have an A+ setup, or when they don't have an A+ setup, I sit sidelined and wait for the next best opportunity. These names are also very, very liquid. They're the markets themselves. There's basically no spread. It's very tight, so you can market order in no problem. It's very easy to trade, and they're the markets, so they're going to be very liquid. It's a global market. Now, because of this, you could trade smaller size because these names yield higher percent gains with very lower risk than other names such as Tesla or Amazon or Nvidia. So you can get, because they expire 3 times a week on Monday, Wednesday, Friday, compared to other equities which expire once a week, you can play closer to expiration, which have technically higher risk. But the way I trade with supply and demand, there will be less risk with higher percent gains if you time the market correctly. Now, there also always will be an opportunity that they can go to zero. However, since they are so cheap, the risk really is in your favor if you do catch the right side of a move. And it works very well with supply and demand. With these price imbalances, it's how the market moves. Because of its liquidity, supply and demand works very well with ES and NQ, or the S&P 500 and the NASDAQ. Now, how I trade this is very simple. There's no reason to overcomplicate it. This is the /NQ. It's the E-mini NASDAQ. Now, when we have a supply imbalance, I'm charting on the futures chart. Although I'm not trading futures, it's acceptable to do so. At a supply imbalance, this is an area on the chart where the supply and demand equation was out of balance. It's a sell order imbalance, and we look to play a bearish position, whether we're shorting the future itself or looking to play puts at a supply imbalance. And on the flip side, for demand, we look to play a bullish position, whether we're playing calls or longing the future. In this case, and how I trade, I am trading the QQQ options solely based off this chart without even looking at QQQ. Now, how I do that is if I'm ready to buy NQ, that chart looks bullish to me, I will pull up the option chain, I will get QQQ in here, and I will pick out an option which fits my criteria based on my strategy. Now, as you can see, volume is extremely liquid, 43,000 contracts, 26,000 contracts, very high open interest. And one thing which is the best part about this is they are extremely cheap. At the money, contracts are going for about 48 cents right now. So one single contract will cost you 50 bucks. That is the most you can possibly lose on a trade. Now, we don't hold to zero, although these can go to zero because they expire 3 times a week. We respect our risk, and since risk is kind of in our favor, the risk to reward will make sense if we time the market right and we get a very good entry based off of the chart. Same thing with the S&P 500 /ES is the future. Whenever I'm bullish on this chart, I will go to my options chain. I will plug in SPY, which is its ETF. These charts are identical. As you can see from the two top charts, they move in sync with each other. However, I prefer to chart the future and trade the options. These SPY options are even more liquid than the Qs. You know, at the money, going for about 20 cents, now 60 cents. So very cheap. Risk is in your favor. And I've seen these things. I've taken plenty of trades where they go up 20, 30, even 50% in 2 minutes or 5 minutes. Very fast moving, especially when you catch the right move. These could also go up 100, 200%, where a $50 investment could turn into a $150 profit if you time the market correctly. Now, everything in the market revolves around context. The pre-market plan, I send these out every day in the Discord, consisted of the S&P 500. We had supply at the 4360 to 4370 area. We really weren't seeing any signs of selling overnight before the market opened, but as soon as we opened, we started selling off, and we had very key demand at the 4334.50 area from yesterday that we also bounced off of. So going back to yesterday's action, this was a key zone that we bounced at. We wanted the same buyers to defend it if we came back into that after selling off from supply. So let's say we get valid confirmation at the supply zone. Once we get some heavy selling pressure, we break the low, we come out of supply, maybe we break below VWAP. I have certain confirmation signals that I do look for. If I'm ready to buy or I'm bearish on this ES chart, I will pull up the option chain. At this point, SPY was around 4360, 4350. So one out of the money would have been at that point while the market was trading. The 434s, I just copied them and pasted them in this chart right here. So on the left here, we have SPY puts, the 434 puts for today's expiration. And on the right, we have the S&P futures chart. At the open, these had a low of 22 cents and had a high today of $1.45, which is a 526% from low to high. Now, obviously, we're not going to catch the bottom and we're not going to sell at the top. So let's just say we waited for it to come out of supply at 940 once we got some heavy selling pressure out of the zone. So 940, we'll translate that to the option. The contracts at this point were about 32 cents. And let's just say we sold 15 minutes later, once we broke below VWAP, just to protect ourselves in this market, which is currently what I'm doing. It's going to be very hard to catch the full move because you don't know if the market's going to reverse because of the context of buyers, or you don't know if we're going to get an all-day sell-off like we had today. So even if it was a 10-minute trade, you sold once we broke below VWAP, this would have yielded 61%. The contracts went from 32 bucks to a high of 52 cents. So 32 cents to 52 cents, that is a 20-cent gain. Now, if you have, let's just say, a $300 account, you're trading one contract, costing you $30. You could sell that $30 contract for $52, and you're making a $20 profit off of a $32 investment. Now, it's all about percentages. People see dollar amount wins, and oh, I only made 15 bucks, or oh, I only made 50 bucks. That's not good. In trading, everything revolves around the process, and the profits will follow. I don't care about monetary value. I care about if you executed the trade according to your plan, you respected your risk, and the percent gain or percent loss on the trade. A $10 winner might be more impressive than a $1,000 winner. It's all about the trade and the setup. So these went up a decent amount in a matter of a few minutes. If we held, we maybe use my take profit strategy and we held for a further move. Let's say we waited for a break below low a day or the highest volume of today around 1010. These contracts went to a high of 74 cents. So now the contracts are up 140% in 30 minutes. Very quick gain, and these move very fast. They're liquid. If you're now trading with heavy size, 200 contracts, 250 contracts, a 20-cent move is going to yield you, $4,000, $5,000 in a matter of minutes. So it happens fast. And by focusing on certain setups, I'm going to show you another setup we took earlier in the week. It eliminates the noise from going onto your charts, for example. Let me pull up my charts here. And scanning for NVIDIA, Apple, Microsoft, seeing the next best setup. If you laser focus on select few names like SPY and QQQ, I'm telling you, you will find more consistency. I don't know what the real reason is, but if you're laser focused, at least this is what I recommend to members in the Discord. And a lot of people see a crazy, significant change to the good side in their trading when they do this and they make profits because they're trading without emotions and they're focusing on the process. Another example would have been on Tuesday. We failed to stay above the high inside of a supply zone. Let's just say we shorted a double top failure or a high a day break after breaking all-time highs. My cursors are linked. Let's just play it conservatively and say we got confirmation at 85 cents. When we're scalping, or at least for me, when I get a quick move, I am taking profits off the table to protect myself. So after I see that quick move at 947, let's just say we take profits at the open of that candle for a quick 22% gain in 6 minutes. So you trade with 10 contracts, it costs you $830. Now you have $1,000, $1,040. So a quick $200 gain in 6 minutes off of just a quick double top rejection off supply. Now let's just say we followed our plan, we held to maybe demand, or we held to VWAP. At this case, VWAP was at $1.60. Now these contracts are up 90%. Our 80-cent contract is now worth $1.60. 85-cent contract is now worth $1.60, almost double in price in an hour, let's just call it. And if we kept holding these contracts, these absolutely exploded. There are some times where if you take some profits off the table, you play with house money and you get a risk-free trade, you can get very crazy gains. For example, 85 cents to a high of 310 for 276%. Now, because these contracts expire 3 times a week, you will get these crazy gains if we have volatility in the market, if we have large ranging days where the market will either rally or sell off. These contracts can absolutely explode. Now, no one is ever going to get the high or no one's ever going to get the bottom, but if you could extract 20, 30, 80% profits in a matter of a few minutes, you brush it off, you focus on the next setup, and you wait for the next one to trigger as long as your edge is present. And also, there are tons of setups throughout the week that happen, whether you get a quick move or whether you get an all-day move. And when there's not a setup and the market's balanced, it's very evident to tell on ES and Q, as it's the market themselves. I look at them as the king daddy of the market. So today on NQ and QQQ from the pre-market plan, we had supply at the 14869, and we also had demand at 14724 that we were bouncing overnight. So we were in between two supply demand zones, and we were just watching for either side participant to be reactive to the market and wait for us to bounce or reject out of it. So here, what I do to translate the QQQ prices is I really don't, but whenever I'm ready to short NQ, I pull up the option chain, and at this point, when NQ was rejecting supply, top ticked it today. I mean, the high of the day was the supply zone. The at the money contracts were the 362 puts. I have them loaded in here. They went to a low of 40 cents to a high today of $3.70. 677% return. You're not going to get the top, but even if you get a quick move off of that, you could have got a quick 60, 70, 80% in a 10, 15 minute period. Now, let's just say we bounce off demand. The contracts were the 359 calls at that point. We bounce off demand on NQ. This thing rallies and hits VWAP where it rejects. At 11:45 today, the contracts were about 47 cents, and which doesn't look like a big move at all. By the time we hit VWAP, they were $1.40. So one contract, it cost you $40 in a hour and 15 minute period, hour and a half minute period. Your contracts at $40 are now worth $1.40. So now you have $140 in equity from a quick trade for 197%. So we could go on all day about it. I don't want to talk about hypothetical scenarios, but these are all setups that I do mention in the Discord and in the pre-market plan. And I'm telling you all, I work with a lot of traders. A lot of them have success sticking with QQQ and SPY. For example, this trader made $5,700 and $1,200 on SPY for a $7,000 profit. 73% and 24%. So he doesn't have a crazy amount invested. It's very feasible. His account was $1,000 to end June, and today it's $20,000. I said keep it up, Do not let your emotions or ego get involved, and soon he's going to have consistent 5-figure days. Trading is all about scalability. If you make a large amount of money in a very fast period of time, your ego and emotions take over, and I can guarantee you a lot of traders will lose it. Another example is this trader took QQQ puts from the pre-market plan, 5 contracts at 58 cents. This trade costed him a little under 300 bucks, and 17 minutes later he sold the same contracts at $1.21. So that 300 bucks is now about 600 bucks for a quick 100% move in 17 minutes. Now, if you're trading with 100 contracts and it's costing you, let's just call it 6 grand, you could easily make a $6,000 profit in 17 minutes just by increasing your size. So it's all about scalability. Start small and build up. That is how you build consistency in trading. You layer brick by brick. A lot of people just try to dump everything in one basket and they go with heavy size. Their emotions are all over the place and they lose it all. Start small and build up. Trading is very, very scalable. This trader, 93% for a $68 profit. Again, it's not all about the money. It's about your return. It's about you respecting your risk management, following your plan, following your edge, and selling when you have to. Again, another trader said supply and demand with SPY and QQQ is the way. I was right. I've been trying to drill this into his head. The emotional aspect is very low when trading these names. It's a big difference. There's no knowledge gap, and he improved a ton on his technical analysis. So try it out. Let me know how it goes. Come back to this video. Comment in the comment section. I want to know how everybody does with this. I'm telling you, if you want to build consistency, you want to build an account, you're struggling, try this out for a month, 2 months, test it out, and let me know. But besides that, I'm going to end it. Be sure to follow me on Instagram. If you learned anything from this video, I would appreciate it if you could just hit that thumbs up button. It means a lot. And definitely check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost, which goes over everything that I know and teach about trading.